January inflation figures are out, and they stand at 16.47%. Needless to say that the fears of those who are concerned by the unrelenting assault on the economy by the COVID-19 pandemic are still being realized. The devaluation of the Naira at the investors and exporters window of the foreign exchange market to 410 Naira to the dollar already seems to be a reaffirmation of that scary prospect. Joining us now to try and make sense of all of this is Bismarck Rewane, Managing Director and Chief Executive Officer at Financial Derivatives Company Limited. Welcome to the program. Good morning, sir.
Mr. Rewane, good morning. Hello.
Good morning, Ruben.
Yes, good morning. Thank you for joining us. Well, very quickly, as Tunu has pointed out, headline inflation is now 16.47%, up from 15.7% in December. Food inflation is now 20.57%, up from 19.56% in December. And core inflation has also risen from 11.85 to a higher figure right now in January. Well, are things getting better or getting worse? And what are the prospects going forward? Will things even get better or get worse as we move on in the first quarter of 2021?
Unfortunately, it's going to get worse before it gets better. But it's going to get better as we go along. And why do I say this? Because I believe that the inflation-stoking factors, i.e. money supply growth, federal government borrowing from the central bank, the exchange rate pass-through, and supply shocks and other disruptions to the supply chain are going to have an impact. And then the planting season comes in, where seasonally there will be shortages. So this is expected. The measures that you're going to take to combat it and moderate inflation that we have to look out for. And basically what the central bank has to do, because they are the monetary policy authorities, is to ensure two things. One, increase the volume of foreign exchange they put into the market. And two, begin to increase interest rates across the board. So when you do that, you actually increase the marginal propensity to save, and also you begin to reduce the marginal propensity to consume, and begin to taper inflation. So those are the facts. There's no silver bullet that is going to solve the inflation saga at this point in time.
Right. No silver bullet is going to solve it, but we could have done something better to stem this in the tide. Hindsight now, like they say, is always 20/20 anyway. What are those things we could have done? Because it's looking like it's spiraling out of control. At first, we said it was the borders. The borders are open now. Nothing. It just keeps going up amidst the insecurity, mammoth insecurity in the country.
Well, there are a combination of factors. You cannot say one particular factor is responsible for inflation in Nigeria. Don't forget, we also have what we call, it's just not hyperinflation, we have a stagflation situation. Here we are faced with slow growth. On the 26th, on the 22nd of February, we are going to have the Q4 GDP numbers, which I am told may not be that bad after all. So if that happens and growth actually begins to pick up gradually, then we may begin to see an output increase, which will begin to taper inflation as we go along. But there's no question the fact that the federal government has now approved the restructuring of its debt with the central bank, which is about almost 10 trillion naira. If that is done and the instruments are issued, which begins to bring up interest rates, and you'll notice that in the last week, we've seen primary market rates begin to creep up again. So principally, we think that we are going to be able to see some increase in interest rates, one. Two, a slowdown in consumer spending. And three, the central bank is also, yesterday they allowed the I&E window rate to drop to 409, 410. So essentially, the exchange rate has devalued by about 4% in the last 2 weeks. And the parallel market has appreciated all the way to 472. So in all fairness, the central bank is beginning to do the right thing in terms of exchange rate flexibility, one. Two, pushing interest rates in the right direction. and 3, beginning to maintain some stability as far as price levels are concerned.
Well, speaking of the Naira, the IMF report says that the Naira is overvalued by 18% and has advised the central bank to devalue the Naira, which they have not done so far. What are your thoughts on that?
I think the IMF took a snapshot analysis of the Naira at that point in time. Yes, it is true that it was 18% overvalued, but that overvaluation is as a result of fundamental issues, speculative issues, and fear. So if you take away the fear and uncertainty, you'll find that that level of overvaluation will actually reduce. So I think we should give the central bank some time. They've moved in terms of, they've moved from 392 all the way to 410. We saw the parallel market come all the way from 500 down to 472. So there is some convergence taking place. But what the worst thing to do is to start announcing that we are about to adjust the currency. We are about to adopt a new forex policy that will, that will fuel speculation. So what is happening now is there's a silent moral situation taking place in the market, and gradually we begin to see this emergence of an efficient and real effective exchange rate, which I think if we hold our nerves, we should see the exchange rate kind of crystallize around 420 Naira to a dollar, and therefore with a range of about 1 or 2% at the parallel market above that, then we are importers, and the market will be quite satisfied with that exchange rate.
Well, Mr. Rewane, 2 quick issues that I can't resist. First, we would like your comment on the emergence of Dr. Ngozi Okonjo-Iweala as the Director General of the WTO. What does it mean for Nigeria, for Africa, and for global trade in terms of expectations across the continent? And then secondly, recently on this program, we've been talking about the CBN's decision to ban financial institutions from facilitating trade in cryptocurrencies. And that has been quite controversial. Do you think that what we're dealing with here is a missed opportunity on the part of the CBN, the Central Bank of Nigeria, to regulate, organize, optimize opportunities with regard to that digital currency?
Okay, let me take the question of Ngozi Okonjo-Iweala, which is novel. I think it's, first of all, she's the first woman. Secondly, she's the first African. Thirdly, the decision is unanimous. So it means a lot for Africa. It means a lot for Nigeria. And basically, in the end, let's face it, Nigeria's share of world trade is about 0.6% of total world trade, and Nigeria's share of global output is about 0.23%. Africa's share of world trade is about 2%, and Africa's share of global GDP is about the same thing. So this is a wake-up call for Africa and Nigeria in particular to pull its weight and do the right things. One thing that is noteworthy is that the World Trade Organization is a free trade leaning institution. It believes in multilateralism, it believes in globalization. And to that extent, it's anti-subsidy, it's anti-restrictions, and anti-prohibition. So Nigeria, on one hand, cannot be putting forward the principles of restrictions and trade prohibitions, and on the other hand, being the champion of world trade and globalization. And it is noteworthy to say that there are 5 institutions, I think, that Nigerian professionals are running either directly or indirectly. One, the OPEC, with the Secretary General of OPEC is a Nigerian. The African Development Bank is run by a Nigerian. The Afrexim Bank is run by a Nigerian. Now the WTO, and also I think the Deputy Secretary General of the United Nations is also a Nigerian. So there is some Nigerian dominance in the professional global citizenry. And it means that as a country, where charity begins at home, we got to reform our policies and be more market-oriented in whatever we do. In any case, the time for restrictive practices, the time for subsidies, and the time for market manipulation are all over. On the second question, which you raised, which is on cryptocurrencies, cryptocurrencies are they are an asset class, they are a store of value, they are extremely risky, but you have to understand it. And to regulate it, you need to understand it. I think what the central bank should be doing is actually committing resources to understanding it and see how we can embrace it and take advantage of the opportunities. At the same time, the Security and Exchange Commission should step up its collective investor scheme protection scheme so that people don't do things that they don't understand. Again, in investments like this, it's what we call the last fool theory. Who is the last fool? Who is going to lose his money? But it's not an opportunity that we can prohibit or ban. It is what we can regulate and see how we can engage while at the same time keeping our eyes wide open. So I can understand the attitude of regulators who say that things we don't understand, let's defer, let's block it out. But the world has moved on. The world has moved far beyond that. And so we need to catch up quite aggressively and see what benefits we can derive from this phenomenon, which is not going to go anywhere.
It's certainly not. I'd like you to talk to us about your thoughts on the government's revenue generation efforts. Now we have oil trading at $63 per barrel, which is great news, and also the Finance Act and the efforts there with trying to block tax leakages.
Well, let me tell you something. At $63 a barrel, our budget was predicated at 40. I'm one of those who said 40 was too aggressive, but now I changed my mind. I think 40 is quite moderate and it's understandable. So we are at least almost 50 or 60% above our benchmark price. So in other words, our revenue profile is quite positive, and it now depends on what you are going to do with this. Now, Nigeria's federal government revenue structure is improving quite significantly, but its spending patterns are still inefficient and unimpactful. So now the emphasis is going to be on what has the government done with the money that it has raised? What's the government doing with the taxes that it is collecting from you, from 5% to 7.5%? What are the governments, I'm talking about governments, both state and federal government, what are they doing in terms of poverty alleviation, poverty eradication, and poverty containment? So multidimensional poverty is about 75%, mainly in the northern parts of the country. So there are things that need to be done and how we are going to have to manage it and make it impactful. Time is fast running out, and it's time now for the federal government to make its impact felt in terms of revenue. So fiscal consolidation and fiscal efficiency is quite clear in the Finance Act, but we now have to make sure that spending and investment with an impact on outcomes and lives of people is what is felt next.
All right, we'll go for a break soon. I'll take your answers after the break, but two questions will be. Number one will be about, the proposed rebasing that is going to happen soon to the economy that MBS is talking about. What should we expect from that? And secondly, debt to GDP ratio now is now trickling up from about 25% that it used to be before to about 40%. What's your take on this? What should we be looking at the indicators? But if the break is ready, we'll take the break around, or we'll come back to you and you take some insights on that. Yeah, thank you. All right, welcome back. We still have Bismarck Rewane, Managing Director and Chief Executive Officer at Financial Derivatives Company Limited. And we've been talking about a couple of issues. Two questions I had for you earlier. Number one would be on the rebasing. Number two would be, debt to GDP ratio moving up from 25% to 40%. What's your take on those two issues, sir?
First and foremost, rebasing of the GDP should be done periodically, normally every 5 years. And it's not only a rebasing of the GDP, but also reconstitution of the inflation basket. The inflation numbers that just came out today are still based on a basket that was framed in 2009, which is totally out of line with reality. If you take the real new basket, the inflation numbers will be much higher than what you see. But now, having talked about that, the GDP rebasing means that you are taking the base from prior period to about 2017 or 2018. The immediate impact is that based on today's inflation, and you deflate it, that the GDP numbers in Naira terms will be higher. But when you take the new currency value, you will find that in dollar terms, the GDP may actually decline in numbers. So, but it's important that you have a more accurate picture, a picture that is reflective of current conditions and of historical data. So, I think what it's going to do is to make our GDP numbers more comparable, and therefore we are able to make decisions. Apart from that, we still have the numbers, our population numbers, which are a subject of estimations so far. We have the NIN, we have the BVNs, we have all of that. We have to bring all of those things together to have one population database which will help us make accurate judgments. On the question of debt to GDP ratio, it's not the fact that you're increasing from 25% to 40% is not the issue. The true issue is that what have you done with the debt? What is the use of proceeds so far? We are beginning to see that we are beginning to build up our debt profile without building up a corresponding increase in the asset. Total factor productivity in Nigeria is -6%, which is dangerous. Labor productivity 3.2%. So all the indicators point to a very fragile economic situation, which needs to be improved. And the only way to improve, we have to see what we have to look out for. One, investment in infrastructure, in roads, refineries, petrochemicals, and then the linkage effect of all of this on output and productivity. I think we are doing two things simultaneously. One, we are dealing with the structural issues, and two, we are dealing with the operational issues, which are the exchange rate, monetary policy, and other variables. Will the results be positive? Yes, but it's going to take some time, and we have to be patient.
Well, oil prices have been understandably volatile because of the crisis of demand and supply and the COVID-19 pandemic. And only recently, the Minister of State for Petroleum Resources was saying that, well, at some point, oil prices, pump price of petrol in Nigeria will have to go up. Now that the spot price is over $60 per barrel. Now, but organized labor is saying, well, that would be a prescription for chaos. Now, what exactly is going on in your view? Are we still maintaining a subsidy regime, or the pushback from the organized labor is as a result of government's failure to be transparent with regard to the deregulation of the downstream sector?
I think there's a deregulation process that has started. It is difficult because of the structure in Nigeria. To protest and to actually call for some elements of subsidy. So it never gets you anywhere. So what are we looking at here? You need a subsidy regime. What is going to happen is that there will be shortages of petrol. And so you will find that the effective price of petrol will not be 167. The effective price of petrol will be that you go to the station and you wait for 2-3 hours before you get your petrol. So when you add the nominal price of petrol, paying about 200 to 300 naira a liter because you take 3 hours before you get your petrol. So we have to deal with that. The reality, government revenue is going to increase because of $63 a barrel. Then on infrastructure, government spending on creating jobs, government spending on education and other things has to be very clearly defined and seen. If not, the people are saying that, look, we are bearing the brunt of the subsidy removal. The government is getting the revenue improvement. The government is getting higher oil prices, and yet the people are suffering. So and the impact of its government on the lives of the people, both at the federal and the state level. This is a challenge. Like I said at the beginning of this program, yes, the revenue profile of the federal government of Nigeria and state government has improved, but the spending there's been no corresponding increase in the impact of the spending on the people. So that is a challenge, and we've got to do that very quickly before the people get restless.
All right, so in about 30 seconds, you might answer this Please, you said something about, the inflation number baskets, the new quota. That's part of the things that's going to come with the rebasing. I'm quite shocked. So what you're telling me invariably that if we were to calculate it normally, inflation should be way higher than what it is today? And is this not sad that we are using an archaic method to make economic plans and projections?
No, not that. You see, you reconstitute your basket. The last basket was 2009, which is about 11 years ago. So it has to, in 2009, how much did you spend on telephones? How much did you spend on broadband and data? How much did you spend on movies? How much did so your consumption patterns have changed since 2009. Therefore, if we use the same basket of 2009, where where the consumption profile was completely different, then we would have different outcomes. So it is true, but that's the reality. So when we know the facts, then when we have the correct data.
Well, looks like we lost the audio connection there, but thank you very much, Mr. Bismarck Rewane. Mr. Rewane, can you still hear us? We still have like just about 30 seconds.
I can hear you clearly.
Well, we still have just about 30 seconds. If you could just summarize your thoughts before we throw to a break.
Yes, facing challenges of high inflation, challenges of slow growth. But the results are not going to happen immediately. But obviously, things are going to get better in the medium term. Thank you very much.
Well, thank you very much, Mr. Bismarck Rewane, for joining us on the morning show.